Bill Miller is a value investor well known for his record-breaking 15 consecutive years of outperforming the S&P 500. That's right, for over a decade, he consistently beat the market year after year, turning a $1 billion into $21 billion for his investors. If we divide the value investing camp into the old Ben Graham's dirt cheap net stocks versus Charlie Munger's growth-oriented high-quality compounders, Bill Miller falls into the latter camp. For example, his most prominent investment cases are Amazon and Valiant. Given these facts, I was surprised to see that currently, Mr. Miller's top 10 holdings include CTO Realty, a retail REIT with market cap less than $400 million. So today, I'm going to share my research on the pros and cons of these REITs and see if we can figure out why Bill Miller bought it as a major position. Let's start with CTO's business model. It has about $1 billion worth of real estate assets across the southern United States, with a focus on Texas, Georgia, and Florida. These states are experiencing higher population growth and generally more business-friendly red states, so this can be considered the first bullish thesis on CTO, although I have to admit this is a weak one. In these states, CTO owns about 23 retail properties that look like this, so nothing really special here. And looking at its occupancy rates, which is between 90 to 93%, these spaces are rented out well. So this is also good, but again, nothing very special. As we can see in the next graph, CTO's lease rollovers are well spread out, and it's comforting to see that for the next 2 years, only 14% of leases roll over. So even if we are worried about an immediate recession, CTO's somewhat protected. Moving on to balance sheet, CTO's total debt is $550 million, which is about 50% of total enterprise value, and less than 8 times debt to EBITDA ratio. This seems to be at or a bit below industry average. But there are 2 additional positives here. First, debt schedule is well spread out. For instance, there is no maturity at all in 2024, and a major maturity comes only in 2028. So CTO will have flexibility for the next few years. In addition, 97% of these debts are fixed, and the management utilized a forward hedge up to 2033 to minimize interest rate volatility. So this well-positioned debt structure can be considered the second bullish point, although again, this is a weak positive. Moving on to the dividend, this DPS growth might imply tremendous growth, but this is due to the fact that CTO transitioned into a REIT in 2020. So if we just look at the dividends starting the full year 2021, its dividend per share grew 12% in 2022, but just 2% in 2023. And its AFFO payout ratio is about 80%. So here again, CTO is at a decent position, but nothing eye-popping here. So far, we've checked the most common factors of a REIT analysis, but cannot find a clear reason why Bill Miller invested in CTO Realty. But digging other details of these REITs, I found a trace in its M&A activities. This graph shows all the buying and selling of assets since 2012. Not only are there so many buying and selling of assets, but the aggregate deal volume was close to $2 billion, which is about 500% of CTO's common equity. Needless to say, this is very high level of activity, and as a natural next step, I calculated how much return these investments created for shareholders. And it turns out that the management generated about 15 to 20% IRR for shareholders for over a decade, which is obviously a very good track record. So I dug deeper into current management team and found out that they took over CTO in 2011, and they essentially ran CTO like a real estate private equity fund, rather than a typical public REIT. In fact, the management states this strategy clearly in its presentation by saying that CTO has a strong long-term track record of monetizing assets at favorable investment spreads to drive accretive earnings growth and attractive risk-adjusted returns, including outperforming the REIT's equity index and peer group average in each of the past 3 years. For example, this property is a recently acquired real estate in Atlanta. The blue areas are already developed, but the green area is an extra parcel of land that can be developed by CTO for value creation. So what CTO does is buy this type of assets that can create extra value, and after several years, it sells the whole asset at a higher price. which is exactly what real estate private equity firms do. But it doesn't end here. CTO also invests in other REITs through both public and private transactions. For instance, CTO is currently the largest owner of Alpine Income Property Trust through PIPE, which is a private investment method, and also through additional investments in public equity. As a result of these investments and negotiations, CTO not only benefits from the Alpine's growth and dividends, but also manages its assets for a management fee. Such investment activities are also happening through CTO's investments into commercial loans and other private equity investments. And if CTO is more like a private equity rather than just buy and hold entities like most other public REITs, it is more important than ever to check the management team's caliber. And here is the resume of John P. Albright, the president and CEO of CTO since 2011. He was the executive director of Morgan Stanley's merchant banking arm and the director of real estate investment banking department of UBS in New York. And in the buy-side world, he served as co-head and managing director of Archon Capital and served as principal with real estate hedge fund manager of Trilogy Capital Advisors. So basically, he is probably in his 50s with decades of experience in not just in real estate, but also in real estate M&A and investing through hedge funds and private equity firms on Wall Street. Of course, a good resume doesn't just correlate with investing skill, but as we discussed before, he has already proven his skill as CTO by generating very high return for over a decade. So the fact that CTO is being run like a real estate private equity firm, led by a competent and proven investor, is a third bullish point. Now let's move on to the valuation. As we can see in this graph, CTO is currently trading at about 15 times EBITDA multiple. This can be considered high in general, but considering that CTO is a REIT, it is lower than where its peers are being traded at about 18 to 19 times at their mean and median multiples. And if you look at the AFFO per share of CTO, which is about $1.75 per share, this REIT is currently being traded at 9.7 times AFFO. And again, this is quite good considering that CTO is REIT. Lastly, I also ran some numbers based on the company provided NAV calculation. And it looks like even if we assume 8.5% cap rate for its current cash flow, CTO has about 35% upside to its intrinsic value. To put this in the context, Realty Income, a very popular REIT among retail investors, its cap rate for new investments are between 6 to 7.5%, and it is fully priced. So it looks like CTO is undervalued based on several metrics, and this is the fourth bullish point. But if CTO is so undervalued, what are the insiders doing about it? First of all, Mr. Albright, the president and CEO, is increasing his ownership of the firm. This graph also includes stock options, but in addition to that, he also purchased shares in the public markets with his own money. Not only that, but the company itself is purchasing its own shares through buyback program. As we can see below with the red bars, CTO continues to buy back its own shares, so when we invest in these REITs, it's not just the 9 to 10% dividend yield in the green bars, but also the buybacks that's beneficial to us shareholders. In terms of other major investors, Bill Miller, who led us to CTO in the first place, is obviously bullish on these REITs. Another major investor of CTO is Lawrence Ryman. His ties to this firm is not very clear, but the fact that he is the founder and CEO of LDR Capital Management, another real estate asset management firm, is a good sign. Mr. Ryman is the largest individual shareholder of CTO and also has experiences at Wall Street, like serving as the managing director of Credit Suisse, running the firm's global real estate securities business, managing $2.6 billion, and also being a top-rated REIT analyst at DLJ in the past. So the fact that insiders and several smart investors are buying and holding onto CTO are the fifth bullish case. So far, we focus on the basics and the positives of CTO, but there are some negatives as well. First of all, WeWork, which filed for bankruptcy, is the second largest tenant of CTO. Although WeWork only took up to 1.4% of leased square footage, its cash flow contribution was about 3.4%. And since WeWork's lease is valid until April 2024, this bad news and negative impact will damage CTO's fundamentals and also push down its stock price until that space is fully emptied and replaced by a new tenant, hopefully by mid-2024. Secondly, perhaps such negative impact from WeWork limits CTO's ability to take advantage of its currently low share price. Because although CTO is buying back shares, the size is actually pretty small, at less than 2% of total shares. And third, the fact that CTO is so small might make some investors hesitant to invest in it. Its trading volume is quite small, and as we can see in the WeWork example, problem with some large tenants can have a larger impact to CTO compared to other larger retail REITs. Okay, so that's about my analysis on CTO Realty. Hope this content was helpful to you guys, and please feel free to share your thoughts on CTO in the comment section below and subscribe to this channel. See you guys in the next video, and here are the 5 bullish and 3 bearish points on CTO Realty.